Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of August the 6th, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, when we look at this move up, the one thing we want to be very clear about is that VantagePoint was forecasting the dollar to go higher right around Tuesday of last week. After we had a false move down on the Monday, the triple EMA cross did not complete. The very next day, we had our medium term crossing our long-term predicted difference, and the dollar started to rise. Now, it's no surprise that the unemployment numbers out of the US were very, very good this week. The U6 number making a big move down to 7.5, the unemployment rate ticking back down to, I believe, 3.9%, a very, very strong labor report. The headline number coming in a little soft, but we really should disregard that, as May and June were both revised up significantly, bringing the 3-month average to about 215,000 jobs per month. But again, the U6 number, guys, is the one to watch, and that is we haven't seen numbers like this on the U6 since probably 2001, back in the Bush era. So basically, you know, whatever's going on right now in the US economy, it's working. And it seems to be firing on all cylinders. This points towards a potential another rate hike in September from the Fed, in my respectful opinion. So the key levels to watch here, 94.52. What I've warned everybody about here too is be very cautious in summer trading. It's thin, it's illiquid, and we see a lot of false moves on the Monday, and then Tuesday, Wednesday, Thursday, and part of Friday, the market goes in the opposite direction. So right now, VantagePoint is forecasting the dollar to strengthen further. Now, one of the leading indicators that's driving this move in the dollar is, of course, gold. Now, gold is coming down to a make or break area here, guys. If we can't hold above up 1200, 1195, then a bigger sell-off is coming potentially in gold. Gold coming under fire from a number of different angles: a weaker yen, a weaker euro, a stronger dollar, all of these things, and even to some degree a stronger Bitcoin is, in my respectful opinion, again only, is fueling some money to move into the Bitcoin arena. So when we look at gold here, gold remains incredibly bearish and unable to break through the key vantage point levels. 1223, 1224, and 1237 all are upside pivots. If the dollar is going to weaken, and again, guys, it's not about being right or being wrong, it's about knowing your levels, okay? When we look at these levels, the dollar is likely to remain strong as long as gold holds below 1237. Now, if we break down below 1195 on gold, then the dollar strength is going to accelerate. And looking at these Vantage Point charts, they are still forecasting that we're going lower. Now, that has had very, very little effect on oil. Oil remains very strong despite these pullbacks. Just be careful again here, guys, on Monday. We see last Monday a big push up, to about 70.50 a barrel, only to turn around and move lower the rest of the week and then start rallying again on the Thursday. Now, this is a common occurrence in summer trading and to some degree in non-trending markets. And as I've said many times, the markets are only trending 20% of the time. The trend is not your friend here, guys. The trend is probably the average trader's worst enemy. So, the key thing is to identify whether the market is actually trending or if it's moving sideways. Oil has been moving sideways here for about a month, going between $73.50 and the $66 a barrel. But we're still seeing good buying down here in summer driving season. If oil is going to weaken, it's probably not going to be until mid-September. Now, with our stocks going into next week, again, a very tough area up here as order flow traders are going to be looking to short the market below the yearly highs. Now, the yearly highs are coming in. We're just going to bring this back a bit so everybody can see this. We're going to come back a little bit further because this is an important area. We haven't made a new high in 2018 since January the 29th. So that high is 2887.20. The market is trying to push back up there. We've got a couple of good solid support levels down here. It's just a question now, guys, if we can break through the immediate resistance zone, which is coming in at or about the 2841 area. So if they're going to try and sell, that's where it's going to be. But we can also assess that we've got good buying down here, solid buying off the critical VantagePoint long-term pivot area at 2810. So we're looking to hold above 28 this week, above 2810. If we can hold above that area, we should see the equities advance despite the dollar strength. My only concern is, again, that labor report is pointing towards another potential rate hike from the Fed, which is not likely going to favor the equities in my respectful opinion. Now, as we move into our main currency pairs, next week, again, we've got a very interesting week ahead of us. Now, the euro, despite many of the different pundits, the euro is bullish, the euro is bearish. It's very much like the dog chasing its tail. The euro is neither here, guys. The euro is trapped in a tight range between 118.40 and the 115.20, but regardless of the different types of analysis that we've seen, gold is the problem for the euro. Gold has a very high intermarket correlation to the euro. As long as gold moves lower, the euro is likely to follow here. So if gold breaks down, that could take us out of this range. But either way, probably by mid-September, this current range that I've identified here is likely going to break. Right now, that is slightly tipped to the downside, but that's not based on a single market analysis chart. It's based on cumulative charts looking at gold, the equities, oil, all of these, the dollar index, all of these are big factors here, guys. So for this coming week, right now, our key resistance zone starts at 115.97. We go then to 116.33 and 116.55. So as long as we're holding under 116.55, we are likely to return to the 115 level. Now, if 115 holds, we just simply wash, rinse, and repeat, and we continue the same cycle in this channel that we've been in. But if it starts to break down and gold starts to break down, there is clearly a breakout play potentially coming. The same thing would apply to US Swiss franc, which is the inverse correlation here to Euro US right now. We've had a pullback on Friday. We would look for a further pullback on Monday so we can start buying this pair potentially on Tuesday. The indicators here from VantagePoint are showing upward momentum. We've closed just above this area here, 99.43. We're closing just above the critical VantagePoint level at 99.32. A long rate off the open, guys, this week. It can't be ruled out because despite what we're hearing, the mixed views of that unemployment report, it was rock solid in my respectful opinion. And looking at the 3-month average of reports after revisions, all point towards this is all favorable for at least another week, usually on the dollar index. Now, our other main pair here is the pound dollar. I would advise to exercise extreme caution with shorts down here. This is a known level of support. Each month, the British pound has made another move to the downside each time. 60 to 160, between 60 and 120 pips each month, it makes another leg down. So we can't rule out that we're not going to make a move down towards the 128, 128.50, maybe even 127.70. That is entirely possible here, guys. So right now, the indicators from VantagePoint, you can see this previous week. Be careful on the Monday because Tuesday, Wednesday, Thursday, and Friday, this thing just simply sold off. So again, the brokers, the market makers try and fake us out on Monday, but Tuesday, Wednesday, Thursday, that's where we make our money. So again, all of these indicators are lining up. The predicted MACD, the predicted differences, RSI breaking that momentum, pushing this thing down. Everything is pointing towards another leg down in the month of August. So once we get that additional leg down, we usually retrace back towards where we started the month. So again, be careful of that. But at this particular time, we simply cannot rule out a move down below this current support zone, which comes in at or about the 129.60 area. Now, with dollar yen this week, we've had a sell-off on Friday, which is a knee-jerk reaction to the unemployment report. We've pushed below that critical vantage point level of 111.49, closing just slightly below it at 111.23. This will be an equity play. If the S&P 500 turns higher with the dollar yen is going to turn higher also. Now, our low point, again, from last week, guys, once again is down in this Monday or Tuesday, and then it just reverses and goes higher. This previous week, we can see that, essentially around August the 1st, the yen started to strengthen a bit. But again, the indicators are mixed here. There's no question about that. We are a little bit overbought. But if the dollar strength kicks in, the yen is going to succumb to that. But again, it's also based around the gold contracts. Now, the yen, just a little side note, a lot of times the yen does strengthen towards the end of August briefly, and that's on, repatriation capital flows. So be a little cautious around that. The yen could probably hold its ground for another three weeks or so, but we are likely to hold down in the bottom part of this current range here. That's coming in around 110.59. Now, as we move into our main commodity currencies here, we're going to see a more volatile trading week with the Canadian dollar, because we have the unemployment rate and the non-farm payroll numbers for Canada are going to be coming out on Friday. But again, it's not so much here just about those employment numbers, but how the Bank of Canada is going to view that. So if we get a hot number out of Canada, that's going to suggest an possible October rate hike out of the Bank of Canada. But if we get a softer number, which is what I suspect we may get, then that's going to signal the Bank of Canada to remain on hold, which will weaken. But ultimately, oil is the driving factor on this particular pair. So if oil is moving up, US-Canada is moving down. If oil is moving down, USCAD is moving up. We already know the other commodities are under pressure, for example, gold. So that could be a driving factor. The Neural Index is still down, but a lot of times here, guys, the US-Canadian pair has made its top or bottom for the week on Monday, and then it is reversed on Tuesday for the remainder of the week until the Friday. So be careful. Right now, our key upside pivot areas here, 130, 130.37, and 130.82. So there's a slight bias lower while below 130.82, but just be very cautious with this pair on Monday and Tuesday. Now, as we move into the final two commodity currencies, Aussie US, New Zealand US, very much not just commodities, but equity based. So if the equities continue to advance higher, that will help the Aussie and the New Zealand. But they are clearly under pressure. We've had a big rally up on Friday on the Aussie and the Kiwi. But if we do a comparative analysis between that and the S&P 500, we can see basically a 95% correlation. So this is very much an equity trade, is where I'll leave this. On Tuesday, we'll get a good feel for whether the stocks are going to move higher or they're going to move lower. If the stocks are moving higher, Aussie US and New Zealand US are likely to follow, but we've got a very mixed bag here on the indicators from VantagePoint, the Neural Index suggesting we're going higher, but we're just barely closing above the key VantagePoint 73.99. The T-cross long, we're closing 73.95, not including the spread. We're basically closing right on that level, so be careful of a false break higher on this one next week. Same as New Zealand US. New Zealand US a little more pronounced here on its break lower, but also we have a very, very heavy visual support zone that's coming in down at or about this 67.13 area, and again an additional support zone that will come in about 66.88. So we've got to watch this area very closely, these support levels, but they truly, both of these two pairs, guys, and including the Canadian dollar to some degree, are highly correlated to the S&P. Stocks go up, risk on environment, they're buying the Aussie, they're buying the New Zealand, they're buying the CAD. But if we go into a risk-off scenario, they're selling these currencies. So with that said, this is the Forex Weekly Outlook for the week of August the 6th, 2018.